Derek here, rural investor. Disclaimer, for entertainment purposes only, not financial advice. Please do your own due diligence and consult any financial professionals that you see fit. Want to talk about the tactics that I use for my margin account. They have been sort of mentioned in passing, but I haven't addressed them directly. I think the easiest one is something that I mentioned in one of my other previous videos. I have a defensive fund, KHPI, and I buy one share a day because it doesn't have big price swings and it pays 9%. And so when the market is down, it's down less. When the market is up, it's up less. And so the actual price isn't that important to me because I'm going to get this tight range of average while it pays me out my 9%. It provides me with that defensive ability with pretty good cash flow. The other thing that I do is occasionally if the S&P 500 or the NASDAQ has a little bit of a pullback or a correction or just a bad month, I'll buy some shares. What I don't do is turn on DRIP, which is a dividend reinvestment program. And that's when a distribution is paid, your brokerage automatically buys you more shares. I don't do that. I think if you don't want to manage your fund and you're in the index funds or use my sample portfolio, I think it's a perfectly fine strategy. Set it, forget it. Your income's going to grow. Don't worry about it. I'm looking to speed up the process. And so I have the base of my portfolio. As we've talked about, I have my defensive funds. And then I have my buying power left over from my margin. And I dump the distributions into that. And I pay down my margin, right? So I ratchet it up. Nothing good there that I'm watching to buy. I let it drift all the way down, which increases my buying power for the account. And I'm waiting for a golden opportunity, right? I'm waiting for a liberation day. I am waiting for a 2022 market crash. I'm waiting for a 2018 market crash. I am waiting for the big 7 companies to fall out of favor. All at the same time, I'll grab Maggie or a couple of them, like happened over the last couple of weeks. And I'm going to buy those couple that have seemed to have fallen out of favor. I want to buy the biggest and best companies for these brief periods in time historically that they've been cheap. And we talk a lot about, the analogy of, buying an excavator. You don't buy it for the excavator to go up in value. You buy it to do jobs. So the way I look at these funds and my buying power is I always want to have something in the tank just in case an opportunity too good to pass up comes along. For somebody who's running a company with equipment, it might be a skid steer from a guy who's, retiring or getting out of the business or just, fed up and moving away. And he just wants to move the equipment off. And he's got a $40,000 machine. And if you take it right now, he's willing to let it go for 32, right? Because it gets him the cash and he can get out of here, right? He can go somewhere warm, doesn't have to deal with the snow. And in my life, I try to plan for those events because they don't happen to you often. And if you can take advantage of them, you can find yourself in a good position by being able to provide liquidity to somebody who needs it immediately. And that's how I look at margin, right? I DCA, dollar cost average, into my defensive funds. I leg in small chunks into the core of my portfolio, my indexes, S&P 500, NASDAQ 100. And then I go essentially all in the very few times that it's been possible into some of these funds that I think are just impeccable. One of those is Microsoft. And so this is an income channel. And so I'm not buying Microsoft stock because I'm not looking for dividend growth. I'm looking for cash flow. And so not only does Microsoft have a great team, I want to find a great team that can run my income version of that. And for me, I use Kurv. They have MSFY, yields 30%, pays inconsistently if you look at the history. But what I'm betting on is that they're going to be able to do a pretty good job with these covered calls right now on a single stock that has fallen out of favor and is unlikely to remain there for more than a couple of months, if that. And I think that's really important if you think about, what my personal goal is, and hopefully the goals, if you're checking out this channel on a regular basis, are, which is to create enough income for us to have our time to do what we want in life. And for me, obviously, it's the homestead. And so having that buying power available is key to that, right? Because if I was just lumping myself into the S&P 500 with my drip on, I'm not going to be able to take advantage. There was a goat found a bag on the other side of the fence, must have left it too close. I'm not going to be able to take advantage of a change in sentiment for an elite company, right? And that's really where you can make some big bucks. It's really where you can accelerate your ability to grow your income, is to be ready for these things, right? Take advantage of the guy who's ready to move down to Miami and sell his skid steer and add it to your fleet to create the opportunity to get more jobs, right? And to do that, you have to be able to have cash available for these moments. And so I think if you wanted to take a look at it, the reason I'm so excited, the reason why I've put in such a huge chunk of my available buying power into MSFY is because Microsoft is trading at a PE level that is essentially at its lows. The low that you have seen it over the last, I don't know, 15, 20 years. I should have double checked that number. Liberation Day lows when Trump announced all those tariffs. 2022 lows, 2028 lows, the last two real big pullbacks. Microsoft was about this cheap when you look at its PE ratio. And so I have been sitting around for a couple of years waiting for this opportunity. And when that opportunity comes, it's not going to be because they decided to go from a 0.5% dividend to a 10% dividend and buy back 20% of their stock, right? It's not going to be at some all-time euphoria, awesome news. It's going to be when analysts are worried about the short-term profitability of their backlog, and their dependence upon OpenAI, or if spending all of this money on AI is prudent, right? That's when there's going to be some instability on the price, when a couple of analysts back off this thing, right? Which is what's happened. And that is your opportunity, if you're so inclined, to go for it. It's when these magnificent stocks that are barely ever this cheap and never for very long show a bit of weakness as far as the analysts are concerned short term. And so when I saw Microsoft down 10%, when I saw it hovering a little bit above 400, at 400, now just below 400, I decided for me it was time to take a run with all that cash that I had been storing up from all the distributions that I generate. And then I do nothing, right? I have my position and I've gone right back to letting my distributions come into my account to build up that buying power, right? Let's say Microsoft goes down another 10% over the next 3 months. I generate thousands of dollars a month in distributions. I'll have another chunk of change that I can go and chase that Microsoft, right? I don't want to see it going into my defensive fund in a big way or automatically reinvesting into the S&P 500 SPYI while it's still hovering near all-time highs. I want to use those distributions for the best job possible, right? Just like you would use a skid steer for a certain job, an excavator, and a plow differently. I would say the distributions can be put to work in a different way to grow your own personal income freedom. So I just want to thank everybody who's tuned in. This question of how I use margin has come up. And, I wanted to address it because I think it's sort of a weird thing to talk about. It's boring to say I buy one share a day, but I do. I DCA, dollar cost average. And it's a little bit boring to say I just wait for the S&P 500 to have a little bit of a pullback, and I go buy a couple of shares of my indexes. But mostly I sit around and wait, let my margin get paid down, build up my buying power, and twiddle my thumbs for an opportunity like Microsoft near all-time low evaluations on its PE. And then I empty the bank and repeat that process. And so, I think you should take a look at what you want out of life, right? This is really about your own personal adventure with finance and what you want to do with your time that this income could create for you. And come up with a short plan, right? Have a short list of stocks that you think are excellent and just know those numbers, right? And then let the indexes do their work. Let your defensive funds do that work. But have a couple of funds that you know inside and out, right? So you don't have to spend a ton of time and just keep yourself refreshed on those. And when they fall out of favor, don't be afraid to pull the trigger, because if you wait until everybody's happy, that's when you're paying 35, 40 times earnings, not 23, 24, like you could right now for something like Microsoft. So if you could like and subscribe, to the channel, like the video, I think it'd be really helpful. My last 3 videos have been beyond anything that I would have ever ever thought possible. And, you know, I wanted to address some of the questions that you guys have had. And really the most common and probably boring is the 3 different ways in which you can deploy your buying power. And so hopefully that was helpful to some of you guys getting into this, or maybe reaffirming to some others who, you know, don't just drip and let it go, but do store that cash up. And we'll get into some other things later about why that is important when it comes to margin if you're going to actively manage your portfolio to some degree. So again, if you could like and subscribe, I'd really appreciate it. Thank you and have a good day.